In recent weeks, the Naira has been on a freefall. Last Tuesday, it fell to a record low of 1,310 to $1 in the parallel market. In an import-dependent economy, such development holds negative consequences to society. Trade and labor unions have all raised alarm and are asking authorities to stabilize the Naira. But how did we get here? Can the Naira get to the respite it needs at this critical time? What should be done at both societal and individual levels to manage this situation? Just Nigeria's Vivian Oguchi has been speaking to experts for some answers.
The Naira was one of the beautiful signs of Nigeria's independence.
The Naira was introduced in the 70s, as at that time, Naira had more value than the dollar.
But now,
the Naira is in free fall because there isn't enough supply of foreign currency into the country.
What does this mean for Nigerians?
The time people put to work and what they take home, you realize that in the real sense of it, they may not be able to take care of themselves alone, let alone their spouses or their children or their family.
If you see the way people are begging, your family members, even the little you are having, to share is a problem.
All the farmer, they don't sell all the chicken now. Sorry, the food is too cost.
In 1973, the Naira was introduced on the 1st of January, replacing the Nigerian pound at a rate of £1 to 2 Naira. That was the heyday of the Naira.
Even up to today, if an Hausa speaker tells you £1, it actually means 2 Naira, because a pound was equivalent to 2 Naira in those days.
In fact, when you have 1 Naira, you have more than $1.
Fast forward to 2023, it's a different ball game.
Naira that used to be stronger than the dollar today is now 800% worse off than what it was when it was introduced. I dare say over 900% worse off.
From here to my daughter's place at Victoria Island, I normally take it for 300. At times when there are these short buses here before, it was 100 Naira from here to that place. But now I'm paying 500 Naira.
Our Lagos Island to Ikeja was around 300, 400. But now it's about 700 Naira.
I'm living at Adeniji side. And before, I bought bus 100 Naira to here before. Now it's now 200 Naira. Some even charge 300 Naira in some places.
From car wash to Apple Bridge was 200 Naira. But with this increment of the fuel and everything, now it's 400.
The salary is not increasing, but the transport rate is increasing. It's overwhelming.
At Sangres Market on Lagos Island, traders say prices of goods have doubled up in the last month.
I bought a bag of rice last month, like 48,000 Naira. Now I'm buying it 59,000 Naira.
This banana before 2,000, 3,000 a mudu. Now it's 8,000, 8,500 a mudu. Times 3.
Ogo, we'll not get to 200 Naira now again. We're gonna from 400, 500 up.
We used to buy this fish 600 Naira. But as I'm talking to you here, the woman said the fish is 1,500 per pieces.
This smallest one, they buy at 2,000 Naira. Before, now 2,000 Naira. With motor, 2,030 Naira. I go sell at 2,200. That big one, they buy at 2,500 now. With motor, 2,530. I go sell at 2,600.
In October 2023, the Naira plunged to new lows on the parallel market as dwindling reserves and dollar inflows made it difficult for the Central Bank of Nigeria to fund corporate and individual demand for the greenback. This is the crux of the matter.
The productivity that will carry Naira is no longer there. And you see, there are two things: confidence and productivity. It has gotten to a point where average Nigerians, when they earn their salary, they prefer to change it to the dollar, to speculate against their own currency, waiting for the currency to fall. Then they will change it back to the Naira spend. If they have change, they will change it back to the dollar or pounds or euro and keep waiting again for Naira to fall. This is a game of wanting to destroy your own country.
Our foreign investment inflows into the country have declined significantly. So from around $23 billion in 2019 to $5 billion in 2022.
Foreign exchange could be sourced through the public or private sector. And as we speak, the major source of foreign exchange inflow into Nigeria is crude oil sales and export of goods and services.
Crude oil exports made up 79% of our total exports. So whatever happens to crude oil, explains the entire story for Nigeria's exports as a whole. And in the last 2 years, we've seen crude oil production decline significantly. Last year was the first time that Nigeria's crude oil production went below 1 million barrels per day.
Segun Ajayi Kadir, Director General of the Manufacturers Association of Nigeria, says the country needs to resuscitate its manufacturing sector.
There is no nation on earth that is considered wealthy or developed or prosperous that does not have a vibrant manufacturing sector.
We need to improve our productivity as a country. Nigeria is dependent essentially on crude oil exports.
Our attention should move away from demand side toward the supply side, and we should start looking at how to solve the problem from supply through export, getting more remittances to Nigeria and getting more investors to come to our country.
In the meantime, the federal government is not resting on its oars.
From supply of foreign exchange from NNPC, increased production, reduced expenditure. From transactions such as forward sales, from our discussions with sovereign wealth funds that are ready to invest and front load, provide advance funding alongside that investment, there is a line of sight on $10 billion worth of inflow of foreign exchange in a relatively near future.
On the other hand, development expert Hosseini Abdu places premium on human capital development.
An all-out policy as dictated by institutions or multilateral institutions that probably care more about their policies than about people will not work for the country. And my advice would be the government to revisit and check what actually works better, that create a sense of stability.
The only long-term solution, the only solution that works is working with the people in the Niger Delta to get them to settle down.
If electricity is epileptic and someone has to buy a backup gen and a backup to get backup and have like 3 backups and things like that, that means that they have to spend a lot more on just running the business.
In summary, experts say Nigeria needs to earn more revenue to be able to service its foreign debts, and that government spending needs to be targeted, with borrowed funds invested so that it translates to more income and growth for the country. Vivian Oguche, Gist Nigeria.
Interesting times indeed.